In 1769, on a narrow street in Frankfurt's Jewish quarter, a teenage coin dealer ran a small money-changing shop. No palace, no army, no political office, just coins, ledgers, and information. By 1815, his 5 sons were operating in the financial capitals of Europe: London, Paris, Vienna, Naples, and Frankfurt, quietly financing governments during the most violent wars of the century. By the mid-1800s, their family had become the most powerful banking dynasty in Europe. Their name was Rothschild. But this is not a conspiracy story. This is a system story. Because the real legacy of the Rothschilds isn't just wealth, it's the architecture of modern finance: central banking, sovereign debt, war financing, compounding interest, multi-generational wealth preservation. Whether you live in America, Europe, Asia, or anywhere else in 2025, your mortgage, your taxes, your currency, your purchasing power all exist inside a system shaped in the 18th and 19th centuries. This video is not about secret societies, it's about structure. And once you see the structure, you'll never look at money the same way again. Mayer Amschel Rothschild was born in 1744 in Frankfurt. Jews at the time were restricted in profession and property ownership, but one field remained open: money changing and trade in coins. When his father died, Mayer took over the small coin dealership. At first glance, it was ordinary work: exchanging currencies, dealing in rare coins, managing small transactions. But Mayer understood something deeper. Money is not just a tool. Money is power. If you control the movement of money, you influence everything that depends on it. In 1769, Mayer became court agent to Prince William of Hesse, one of the wealthiest rulers in Europe. The prince earned enormous income renting soldiers, mercenaries, to other countries. Mayer helped manage and move that money across borders. And here he learned his most important lesson: governments need money, and whoever supplies it becomes indispensable. But Mayer's true genius was not in banking alone. It was in strategy. He had 5 sons, and instead of keeping them close, he sent them outward. In the early 1800s, Mayer positioned his sons in 5 financial capitals: Amschel in Frankfurt, Solomon in Vienna, Nathan in London, Karl in Naples, James in Paris. One family, 5 cities, one coordinated network. Each son operated locally, building trust with political and financial elites in his region. But privately, they were connected, sharing intelligence, coordinating capital flows, moving funds faster than governments themselves. This was revolutionary. Before this, banking was largely local or national. The Rothschilds created the first truly international banking network, and it gave them something unprecedented: speed. The Napoleonic Wars from 1803 to 1815 reshaped Europe. Every major power needed financing: Britain, France, Austria, Prussia, Russia. Armies require weapons, supplies, logistics, and salaries. Wars are expensive. Governments rarely have enough cash reserves, so they borrow. The Rothschild network became the bridge. Nathan Rothschild in London financed British operations. James in Paris operated in France. Solomon in Vienna supported Austrian needs. The family didn't need to choose a side politically. They needed to be the creditor, because wars end, but debt continues, and creditors get paid regardless of who wins. This wasn't about ideology. It was about structure. The famous story of the Battle of Waterloo in 1815 illustrates the power of information. Nathan Rothschild reportedly had faster communication networks, couriers, ships, and messengers that allowed him to receive news before official government channels. In financial markets, information equals advantage. Bond prices rise or fall based on outcomes. Whether every detail of the Waterloo trading legend is exaggerated or not, the principle is clear. Speed of information creates financial leverage. And the Rothschild network mastered cross-border intelligence. They were no longer just bankers, they were system builders. To understand their long-term impact, we need to understand central banking. The Bank of England, founded in 1694, introduced a powerful model. The government needs money. A central bank creates money and lends it to the government. The government repays it with interest. Taxes fund the repayment. This structure means governments operate through debt issuance, typically bonds. The Rothschilds did not invent central banking, but they became deeply involved in government bond markets across Europe. They specialized in sovereign debt, loans to governments. And here's the key insight. Debt creates dependency. When a government owes money, it must maintain credibility with creditors. It must manage inflation, taxation, and fiscal policy in ways that preserve borrowing ability. Over time, sovereign debt became a permanent feature of modern states. Today, institutions like the Federal Reserve, the European Central Bank, the Bank of England, the Bank of Japan, all operate within central banking frameworks involving currency issuance, interest rates, and bond markets. The Rothschild era helped normalize sovereign debt as the backbone of government finance, and that model spread globally. The most powerful force in finance isn't secrecy, it's compounding. When debt carries interest and that debt is rolled over repeatedly, the financial system becomes ongoing, not temporary. Governments rarely eliminate debt entirely. They refinance. Old bonds mature, new bonds are issued. Interest payments continue. This creates a structural flow, tax revenue to debt servicing to bondholders. Bondholders today include pension funds, insurance companies, central banks, sovereign wealth funds, and institutional investors. The system is no longer controlled by one family, it's institutionalized. But the architecture, bond financing, interest-bearing currency, structured refinancing developed heavily during the Rothschild era. Most fortunes fade within 3 generations. Founders build wealth, children preserve it, grandchildren spend it. The Rothschild family approached wealth differently. They used intermarriage within extended family lines, trust structures, collective ownership, and long-term capital reinvestment. Wealth was not treated as personal spending power, it was treated as a permanent financial engine. They diversified into railroads, mining, infrastructure, government advisory roles, and industrial finance. They financed rail networks across Europe. They were involved in large-scale projects like the Suez Canal. They positioned themselves not just as lenders, but as intermediaries in economic expansion. That's how you turn capital into a dynasty. Over time, the Rothschild name faded from headlines. New financial giants emerged: J.P. Morgan, Rockefeller interests, modern asset managers. Today, firms like BlackRock and Vanguard manage trillions in assets. They don't necessarily control governments, but they hold significant shares across industries. Ownership in modern finance is dispersed. Influence is often indirect. Advisory roles matter more than visible leadership. The Rothschild legacy isn't about a single family pulling every lever. It's about the institutionalization of financial methods, international banking networks, government bond markets, central bank frameworks, and structured wealth preservation. The system became self-sustaining. Modern economies rely on debt. Governments issue bonds, investors buy them, central banks influence interest rates. When deficits rise, borrowing increases, interest payments grow. This doesn't automatically mean collapse. Debt can fund infrastructure, war, healthcare, or economic stimulus. But it does mean something important. Interest becomes a permanent budget line. In 2025, many major economies spend enormous sums annually just servicing debt. That's not inherently evil, it's structural. Once sovereign debt becomes foundational, interest payments become continuous. That is the long-term financial machine. And it began scaling globally in the 19th century. Wars dramatically accelerate borrowing. World War I, World War II, Cold War expansions, modern conflicts. Each major conflict increased sovereign debt levels. War demands rapid capital mobilization, and bond markets provide it. This dynamic was visible during the Napoleonic era. It remains visible today. The relationship between war and debt is structural, not mystical. Conflict expands borrowing capacity. Borrowing increases interest flows. Creditors benefit from stable repayment systems. The Rothschild name attracts extreme conspiracy theories, claims of world domination, secret societies, supernatural control. These narratives oversimplify complex systems. Modern finance is not controlled by a single family. It is controlled by interconnected institutions, regulations, and markets. But dismissing myths does not mean ignoring structure. The real power lies in understanding how money is created, how debt is structured, how interest compounds, and how capital moves across borders. That knowledge is more powerful than any myth. Meyer Amschel Rothschild died in 1812. His sons built a coordinated international banking network that influenced sovereign finance across Europe. Over time, their methods became embedded in institutions: central banking, government bonds, interest-bearing currency, long-term capital structures. The Rothschild name may not dominate headlines today, but the architecture remains. Modern finance runs on systems developed and refined across centuries, not by magic, not by secret rituals, but by strategy, patience, and understanding of money. The greatest power is not owning land, not commanding armies, not holding political office. It is understanding how money is created, how debt compounds, and how financial systems sustain themselves over time. You don't have to believe in conspiracies, but you should understand structure. Because once you see the architecture, you see it everywhere. And once you understand the system, you stop being surprised by it. That awareness alone changes everything.